Hi guys, and welcome to today's market update, dated April 1st. Welcome to April 1st. So if you got April Fool today, then tough luck. But nevertheless, we're going to discuss in regards to the SP 500, where to from here. The market's basically dropped yesterday and today. So the question is where to from here? Well, it all depends on certain reports. We have we go through Forex Factory here for a second. I believe we have non-farm payroll tomorrow, or is it on Friday? Sorry, no, tomorrow will be unemployment claims at 4:30 Eastern Standard Time. You notice you also have some European news there. You have Canadian news, and then you have Australian, back to Europe. And then on Friday, yes, we have average hourly earnings, non-farm employment change, and unemployment rate. So it all depends on what the reports are going to be. Based on unemployment claims, a couple of weeks ago, the report was 3.2 million, close to 3.3. Now they're forecasting around 3.6 million in regards to unemployment claims. So if it's going to be less, then it's going to be good for the currency, it's going to be good for the markets. But if it's going to be more, then it's not going to be good. So in other words, it all depends on what the report is going to be. There could be a continuation of the price to go further and retest 2,180. But if not, if it will hold its price here, notice there's, in terms of retracements, if you're new to this, retracements are simply when price will retrace, so will come back in terms of a pullback. And there's a tool I use called Fibonacci tools. It's simply a guidance indicator on where price will correct itself. So notice in regards to the correction from this whole big impulsion from the top, and where it basically held its price, where buyers were supporting it, it went all the way to 38.2, around the 2,640, came back down 2,467. So short term to medium term, I'm still actually bullish. The odds will probably go to around the 50th percentile, around 2,787, all the way to 2,930 is highly probable. Only it all depends on what the news is going to be. But if it's not going to be good news, then a continuation of price to the downside is highly probable. Remember, for the month of March, it was such a big drop, actually February and then March. So it tested certain price points. It tested the primary uptrend in regards since 2009, where we were in an uptrend. Overall, if it holds its price right here, then we're still in the bullish trend. However, but looking at it and with the whole data that's coming through, it may correct, and then the second big wave will happen. And when that happens, it will, when it retests around the 2009, 3000, this is going to fail all the way down. And in my opinion, this is where we're going to be in a downtrend for the next few years to come to retest this 1,600 all the way down to around 1,500. So if you have currently a portfolio and you're worried about your portfolio, Monday to Friday, by the way, we are doing, I go through events. Monday to Friday, 11 o'clock Pacific Standard Time. For 45 minutes to 1 hour, I'm doing a free presentation in regards to how you can strategize and manage your own portfolio, where we discuss different asset classes. If you want to know more, and if you're a newbie, you're a beginner, what are these different asset classes? And if you also want to know how to minimize your risk, what can I do in order to minimize my risk? And also knowing about the whole global economy in regards to what you could do from there based on your own portfolio. Then maybe perhaps there's certain potential opportunities. And at the end, if you stick around, I'm more than happy to give you basically a beginner course that you can take on basically from there. That's basically for free in terms of a learning aspect. I can also be reached here. I teach 2 times a week in FX Street. And in terms of support, if you go through the education link here in the Trading Institute, so I always appear every Tuesday and Saturday. So Tuesdays, I teach at 1:30 Eastern Standard Time. That's 10:30 a.m. Pacific Standard Time. And on Saturdays at 8 a.m. Pacific Standard, which is 11 a.m. Eastern Standard Time. There's a lot of really good educators here, from Wayne to John to Jeff, Bojan, Pedro. So they're also being recorded. So just go to FX Street. And yeah, if you want to learn more about multi-asset classes, then that's also a good place to learn. But other than that, I teach in regards to from the basic element and all the way to the advanced. So if you're new, get in contact with us, and more than happy to help you out in regards to your education. All right, so going back to what we can see fit in regards to the S&P, like I said, short term I am bullish. Caveat though, it all depends on the news. And as for a disclaimer, by the way, guys, I'm not here to give you any form of advice. I'm not here to tell you to buy or to sell. This is just simply my own forecast and what I see fit objectively, what the market is actually telling me based on the data that's currently being given. And then from there is the probability that's being measured. So if you need to know more, please feel free to learn more, get educated, get in contact with me at estrators@gmail.com, and I'm more than happy to help you out. And at the same time, please take full responsibility of your own actions, right? And take full responsibility of your own portfolio. And whatever happens, don't blame others, because at the end of the day, it's your fault for not being responsible with your own portfolio. So sorry to being blunt, but at the end of the day, it's just the way it is. So going through here in terms of the S&P, can it tank even further? Absolutely. I believe the big second wave will happen, but in due course. Also, I believe that this is also going to correct a little bit more because of such a big drop. When there's not enough demand, people or institutions will create demand, and then retailers will follow suit from there. And you can always see through here, that's an unfilled order from an institution. There's also a big space right here around the 1900 mark in regards to unfilled orders. And if I look at the VIX also is still currently bearish. It has some potential that it could drop even further. Then that happens, then a correction will occur. But if not, this is going to continue to go to the upside as well. So these are what we're monitoring in regards to leading and leading indicators. And so if the VIX will continue to, and there's more fear, then this is going to go back up. But there's a lot of certainty. Coronavirus will be contained, and this is also going to drop to fill in the gap through there. But it all depends on external events. All right, let me go through the dollar index, because one of the most important ones are in terms of an indicator is the dollar index that tracks the valuation of the dollar. So as a foreign exchange of a currency trader, so this is what I basically look for as a leading indicator and see where it's at. Notice there's also a lot of bearish in regards to this actually happened based on the stimulus. And hence, if they're going to print more money, then definitely long-term, I'm actually bearish with the dollar. Currently, it's just correcting itself. If this lower high holds, then the dollar or the dollar index can go further down here on the 97.67. And hence why I am bullish with the euro against the US dollar. So currently as well testing certain retracement levels, certain demand levels, and this could potentially go all the way back around to 114.90, all the way even to 116 based on unfilled orders right there. So this is my short market update. So if you have any questions, please feel free to email me at estrators@gmail.com or give us a call. Other than that, take care until next time, guys. Happy trading. We'll see you next time. Bye for now.